April 17th, 2026. It's a monster news day. Let's get into it. Today's episode is brought to you by Compete Token, the gaming crypto that actually has real games. Link in the description. Bitcoin just hit its highest price in 10 weeks, and Iran's the one who triggered it. Iran's foreign minister declared the Strait of Hormuz completely open for commercial shipping during the ceasefire with Israel and Lebanon, and every risk asset on Earth immediately lost its mind. Bitcoin screamed to $78,000, oil crashed 11% to $84 a barrel, the S&P 500 and Nasdaq both hit all-time record highs, Ethereum jumped 6% to $24.40, Solana gained 6.5%, Ripple popped 6%. When the world's biggest oil choke point unchokes, Bitcoin doesn't ask questions, it just pumps. Crypto stocks went even crazier than the coins. American Bitcoin surged 21%, Strategy jumped 13%, Coinbase gained 6%. 21 Shares analyst Matt Mena called it the risk-on signal the global markets have been waiting for. Reports also emerged Friday that a deal may unfreeze $20 billion in Iranian assets in exchange for their enriched uranium stockpile, pushing sentiment even higher. One catch: the ceasefire expires April 22nd, so enjoy the ride while the window's open. $820 million in crypto shorts just got obliterated, and it's exactly as brutal as it sounds. $660 million of that was short positions. Bitcoin alone vaporized $353 million in shorts. Ethereum torched another $160 million. The single biggest kill, a $15.75 million Bitcoin short on Hyperliquid, closed out in one clean shot. That person is having a truly terrible Friday, and honestly, they earned it. Here's what makes this rally technically significant. Bitcoin's weekly momentum indicator just printed a bullish cross from the lowest level in its entire history, the same pattern that preceded a 376% rally when it last triggered at the 2022 bear market bottom. Analysts are now calling for $85,000 to $88,000 within 2 to 4 weeks. Open interest jumped 13% in 24 hours. The bears didn't just lose today, they may have lost the whole month. While shorts were getting vaporized, Michael Saylor's $60.5 billion Bitcoin bet just flipped to profit for the first time in 3 months, and Saylor celebrated by posting an AI-generated image of himself shirtless on a luxury yacht captioned, "Bitcoin and chill." Strategy holds nearly 781,000 Bitcoin, accumulated at an average of $75,577 per coin, and as Bitcoin crossed 77,000 today, the entire position went green. The man held through billions in paper losses, ignored every critic, and his victory lap is a cartoon yacht. Respect. Strategy shares surged up to 13%, their best single-day performance in over a month. The stock is still down 42% from its 6-month peak, so this is recovery territory, not a final victory lap just yet. Also on Friday, Strategy filed a proposal to move its STRC preferred stock dividends from monthly to semi-monthly payments, which Saylor says will reduce volatility and grow demand. Outstanding notional value on the STRC series has already climbed to $6.4 billion. The full send Bitcoin treasury machine is operating at full capacity. Beyond the market madness, one of the biggest exchange deals of the year just dropped. Kraken just spent $550 million to buy the keys to US crypto derivatives. Payward entered a definitive agreement to acquire Bitnomial, which holds all 3 CFTC licenses required for a full-stack U.S. crypto derivatives business: exchange, clearinghouse, and brokerage. According to Payward's co-CEO, the U.S. has had no clearing infrastructure built for digital assets. Bitnomial spent a decade building it. That's the kind of regulatory moat you can't just spin up overnight. The deal values Payward at $20 billion, same as its November funding round valuation. Earlier this week, Frankfurt Stock Exchange operator Deutsche Börse invested $200 million for a 1.5% stake. Kraken already holds a Federal Reserve master account since March. Now it's layering on CFTC-regulated spot margin, perpetual futures, and options for U.S. clients. The crypto exchange that institutional finance is going to end up using, whether it likes it or not, is taking shape, and its name is Kraken. Ethereum just had the busiest quarter in its entire history, and the price still hasn't gotten the memo. 200 million transactions on Ethereum's base layer in Q1 2026, the first time the network has ever crossed that mark in a single quarter, up 43% from Q4 last year and more than double the 2023 lows. The stablecoin supply on Ethereum alone hit a record $180 billion, 60% of the entire global stablecoin market. Record network usage, price cut in half, make it make sense. Ethereum is still down more than 50% from its August 2025 peak of nearly $5,000, trading around $2,300 today. Accumulation wallets absorbed 6.5 million Ethereum since January and now hold 26 million coins, a 33% increase. Technical analysts see a cup-and-handle chart breakout targeting $3,150. The Ethereum Foundation also revealed this week that a 6-month funded project identified 100 North Korean government operatives embedded in crypto companies under fake developer identities. The fundamentals are there, the network is being built, the price will follow. The US government just moved Bitcoin from the $9 billion Bitfinex hack to Coinbase Prime, and it's probably a sale. Blockchain data from Arkham Intelligence showed the DOJ transferred 8.2 Bitcoin, worth about $628,000, to Coinbase Prime on Thursday. These coins are part of the more than 94,000 Bitcoin seized from hackers Ilya Lichtenstein and Heather Razlakhan Morgan, now worth over $7.2 billion in total. When governments move crypto to exchanges, they're usually not doing it for the air miles. The extra plot twist: both Lichtenstein and Morgan were recently released from prison early, and Morgan publicly credited Papa Trump for shortening her sentence, even though no official commutation was ever announced. So the Bitcoin thieves are free, their stolen coins are headed to a liquidation exchange, and nobody knows exactly how they got out early. It's a heist sequel with on-chain receipts, a rapper protagonist, and a very convenient pardon narrative, only in crypto. On the regulatory front, Senator Elizabeth Warren just accused the SEC chair of lying to Congress, and that's actually a federal crime. Warren sent a formal letter to SEC Chair Paul Atkins this week, alleging he misled the banking committee about the agency's collapsing enforcement activity. The SEC brought just 256 new cases in 2025, compared to a 10-year average of 765 per year. That's a 66% drop. When Warren pressed Atkins about it in a February hearing, he said he disagreed with the premise. The data has a different opinion. Will anything actually happen to Atkins? Almost certainly not. The Trump DOJ isn't charging a Trump appointee for lying to Democrats. But if Democrats flip the Senate in November, Warren becomes banking committee chair and the whole conversation changes. For crypto, the enforcement slowdown has been welcome news, but the SEC has also stopped policing traditional securities fraud across the board. And that's a harder sell when the president's family is running crypto businesses. Warren's not wrong that something is off. She's just politically powerless right now. Across the Atlantic, Europe is making a major policy shift. France just did a complete 180 on stablecoins, and they want a euro tether, fast. Finance Minister Roland Lescure threw his full support behind the Cavalis Euro stablecoin initiative this week, a project led by ING, Unicredit, and other major EU banks targeting launch in the second half of 2026. France previously opposed privately issued stablecoins. They watched Tether build a $186 billion business and apparently thought, we want one of those. Better late than never. But wow, this pivot is sudden. The global stablecoin market cap now exceeds $320 billion, and institutions are sprinting to get a piece. Singapore Gulf Bank this week added the ability for institutional clients to mint and redeem stablecoins directly from their bank accounts on Solana, 24/7 settlement, no intermediaries. MasterCard acquired stablecoin infrastructure company BVNK for up to $1.8 billion back in March. Every major financial institution on Earth is building stablecoin infrastructure right now, and Europe is finally deciding it doesn't want to get left behind. The digital dollar dominance that the US didn't even plan for has become Europe's biggest financial threat, apparently. Shifting to crypto meets AI, Sam Altman's World just launched its biggest upgrade ever, and the token immediately dumped 10%, because of course it did. World, formerly WorldCoin, dropped World ID 4.0 on Friday, a full-stack proof-of-human identity system now integrating with Tinder, Zoom, DocuSign, Vercel, Okta, and more. 18 million verified humans across 160 countries are already in the network. Zoom is using it to spot deepfakes in video calls. Tinder is rolling out verified human badges in the US. The WorldCoin token fell 10% on the announcement. This is crypto's version of great news, sell the coin. And here's something genuinely alarming underneath the World ID story. The Ethereum Foundation revealed this week that a 6-month funded project called the Ketman Project identified 100 North Korean government operatives embedded inside crypto and Web3 companies under fake developer identities and sent alerts to 53 Web3 projects that may have hired active DPRK workers without knowing it. The bots, the deepfakes, the state actors, the proof of human arms race is not a future problem. It's happening right now, inside the companies building the tools you use every day. World's timing is not an accident. Alright, let's end on something completely wild. A meme coin pumped 71,000% overnight because Elon Musk replied to a tweet, and someone turned $2,500 into nearly $500,000 as a result. The asteroid token on Ethereum, a Shiba Inu mascot created by a teenager named Liv Perotto for SpaceX's Polaris Dawn mission in 2024, exploded Friday after Musk replied to a post about Liv's story. She had passed away from cancer earlier this year before ever getting to meet him. 8 minutes after Musk's reply, one wallet spent $2,500 on asteroid tokens. By morning, it was worth nearly $500,000. The token hit $43 million in daily volume. Is this a sustainable investment? No. Is it a financial instrument? Barely. But it's a genuine moment of the internet rallying around a story that moved people, and someone got extremely lucky because they moved fast. This is crypto. The market doesn't run on fundamentals alone. It runs on stories and vibes and occasionally Elon Musk being online at midnight. Trade meme coins at your own risk, but never say this space isn't interesting. That's a wrap for today. One last shout out to Compete Token, the gaming crypto with actual real games behind it. Link in the description. This is Crypto Pulse for April 17th, 2026. Stay bullish and we'll see you tomorrow.